at TFNN. Breakout Investing with your host, Ken Shreve.
Good afternoon, everyone. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you on a new schedule, 5 days a week. Breakout Investing from 3 to 4 Eastern. Thanks very much for tuning in. The number to use, as always, 877-927-6648. So going from 2 days a week to 5 days a week now, from 3 to 4 Eastern time. Very happy about that. So be sure to give me a call. If you can't listen to the show live, you can get it as a podcast on iTunes. Don't forget, you can listen to all TFNN programming on your smartphone. Just type in tfnn.mobi, tfnn.mobi in your smartphone browser, and you can listen to the stream that way as well. And like I always say, Tiger TV on the homepage of tfnn.com. If you're listening on your PC, you can look at charts live right along with me on Tiger TV Channel 1. The show is carried live, and Channel 13, the show is archived, so be sure to check that out. You can also watch Tiger TV on your smartphone as well. All right. Let's take a look and see where we're at here. About 50 minutes left to go in Monday's session. The NASDAQ Composite, we'll do a quick refresh here and see the NASDAQ Composite down a little more than 10 points, almost 0.4% to 29.27 for the NASDAQ Composite. We were down Friday. Not a great day for the market last Friday. What was a little disturbing about the NASDAQ is we did see NASDAQ volume pick up slightly from Thursday's level, so it was a mild day of distribution, a mild day of professional selling in the NASDAQ only on Friday, but still, you don't like to see higher volume declines in the major averages soon after a follow-through day, and that's what we saw on June 29th. We had broad-based gains in the major averages. We had the NASDAQ on June 29th up 3%, S&P 500 up 2.5%, Dow up 2.2%. So that was a buy signal for the market. The S&P 500 also declined Friday, but volume came in lighter than what we saw on Thursday. So a little discouraging to see heavy volume on the NASDAQ on Friday. Right now, NASDAQ volume is tracking pretty close to what we saw on Friday, which was very light, 1.4 billion shares. So we're tracking just a little bit lower than that, but pretty much on pace to hit that 1.4 billion level. We'll see if volume picks up during the last 50 minutes of trading or so. On the NYSE Friday, we had also very light volume, 590 million shares. Volume right now in the New York Stock Exchange is tracking a little bit higher than what we saw on Friday. So, where are we at with this market? Buy signal on June 29th, rallies, once again under a little bit of pressure here. It's frustrating, but not that surprising to see this type of action. I mean, investors are getting more clarity. I mentioned last week there were some layers of uncertainty that have been peeled away from the market. Supreme Court rules on Obamacare. We had positive headlines out of Europe after that 2-day Euro summit came to an end with a little more clarity than perhaps what Wall Street was expecting. The problem is there's still a lot of headwinds out there, and most importantly, there's still money on the sidelines that is hesitant to come in. We've seen subtle signs that it's trying to come in. I think institutional money wants to come into this market, but it's still very skittish out there. So even though we're seeing some signs of institutional buying, I think on June 29th when we got that buy signal, the broad-based rally, I think some new money did come in from the sidelines there. But you still have a lot of money still on the sidelines that is hesitant to come in here. Headwinds are definitely out there. Strong dollar. Dollar is still in an uptrend here. The market is down today, but the Dollar is also down. Right now, the U.S. dollar index trading around 83.17. Not down by much, maybe 0.25%. Let's take a look at the UUP. This is the PowerShares Deutsche Bank U.S. dollar index bullish fund. Pretty much tracks the performance of the U.S. dollar index. You can see it's down about 5 cents now, 0.2% to 22.90. But the dollar has been rallying very strongly. Thursday and Friday, big gains for the U.S. dollar index. So this is definitely a formidable headwind. We didn't check on the S&P 500. Let's quickly just get a quick look at what the S&P 500 is doing today. Last check, it is down 0.3%, about 4.5 points to 1346. And again, here was your buy signal, June 29th for the S&P 500. This was actually a fourth day follow through for the S&P 500. The follow through for the Nasdaq Composite came much later after the first day of its rally attempt. But bottom line is we got a buy signal on June 29th, and that buy signal is still intact. The Nasdaq's higher volume decline on Friday is a bit of a concern. The market's performance today definitely skittish. Hopefully Nasdaq volume will come in a little bit lighter than what we saw Friday. Looks like we could see some distribution in the S&P 500. So kind of a skittish environment, not an easy environment at all for growth stocks. There are a lot of good stories out there, but there are just as many bad stories. Stocks falling apart, stocks trying to show relative price strength and falling pretty much on their face soon after breaking out. So definitely a very mixed environment for growth stocks. If you'd like to check out a trial to my Ultimate Growth Stocks newsletter at TFNN, you can do that. It is a weekly newsletter published every Tuesday. I'll be putting out my next weekly update early tomorrow morning, and I send out an expansive weekly update on Tuesday, and then in between, email buy and sell alerts, market updates. I do have a model portfolio that goes along with the newsletter. So if you want to see what kind of stocks I own, what kind of stocks I target, be sure to check out a trial at TFNN.com. In fact, you can go to KenShreve.com. That takes you to my TFNN page, and you click on the green banner there and get 30 days free, 30 days free of Ultimate Growth Stocks. All right, taking a look at gold today. Up $10.20, 0.7% to $1,589.10 an ounce. We'll check in on the Spider Gold Trust. See that right now it is trading up 57 cents, 0.4% to 154.28, 154.28, benefiting a little bit today from the weakening dollar. And then crude oil up 1.8% to $85.99 a barrel. So headwinds for the market, they're still out there, no question about it. The strong dollar, that is potentially problematic. We're also getting into earnings season. We've got Alcoa after the close today. It's going to start to get busy, and people are asking me about earnings season. And from what I've seen so far, Bed Bath & Beyond, Nike. Last week we had some negative pre-announcements from the disk drive maker Seagate. Also Informatica last week. Very not a good outlook from that company. I'd like to remain optimistic that second quarter earnings season are going to come in better than expected, but if I had to pick, I'm going to say it could be a disappointing earnings season. Has that been priced into the market already? Possibly. It's still a risky market environment, even though we did get a buy signal on June 29th. So I'm going to try to swim with the market tide here as much as possible. I believe the market trend is still upward here. We are under pressure. It's not an environment where you can be aggressive with new buys. In fact, I've I had my foot on the accelerator last week for a few days. I added actually 4 new names to the model portfolio since June 29th when that buy signal came. But that's it for now. I'm just going to wait and see how these names look and how they work in coming days. But stocks under some pressure today is definitely cause for concern. What are we looking at for second quarter earnings season? Well, Thomson Reuters expecting 5.8 8% second quarter earnings growth across the S&P 500. That's down from a 10.1% forecast at the start of the year. So expectations are pretty low. We've also got other headwinds for the market. Let's check in on the XLF financial stocks. I don't think the market needs financials to participate to do well. It doesn't hurt, but financials have been under renewed pressure. See the XLF, the Select Sector Spider Financial ETF is working on 3 straight losing days here, trying to find support here at its 50-day moving average. XLF today down about 0.5% to 1440. We've got a couple of high-profile financial earnings reports later in the week from J.P. Morgan Chase and Wells Fargo. We'll talk about them in a little bit, but Wells Fargo definitely looking better than J.P. Morgan Chase in terms of its technical structure. But we'll talk about that in a little bit. So we'll see. We also have Spain. Rising bond yields in Spain. The 10-year note in Spain over 7% again. That's sort of a psychological level. So there's these concerns in Europe are just persistent, and they're not going away. So headwinds are out there, and it's just a kind of a market where you're going to get curveballs almost on a daily basis. But that's why I really just try to glean clues from the major stock indices every day. When you get a buy signal like you did on June 29th, ideally in a perfect world, you're going to see volume expand to the upside, volume contract to the downside. Now that's in a perfect world. If you don't see that, well, these are little clues that the market can give you that it's maybe not as healthy as it looks. Again, the higher volume decline by the Nasdaq on Friday was not good to see. It's not a deal breaker, it's just a yellow flag. And if you start to get numerous yellow flags that appear, pretty soon it's going to result in one big red flag for the market where you need to stop buying stocks and kind of let things sort themselves out. So I'm cautious here. Again, I put some money to work last week, and we'll just see how things go. I'm not ready to give up completely, throw in the towel here, but some weakness in the market Friday, and some more weakness today, unfortunately. So take a look at some story stocks today. Let's check in on WLP, big acquisition. WellPoint Health Networks is buying managed care provider Amerigroup for about $4.5 billion in cash. Amerigroup manages publicly funded health programs like Medicaid. Remember, the Medicaid insurers were some of the big winners after the Supreme Court ruled mostly positively on Obamacare. I think it was about 10, 11 days ago, but we'll see shares of WellPoint today up 3.5% to 62.03, rebounding after really getting hit hard over the past 6 trading sessions. WellPoint has actually been under quite a bit of selling pressure after the Supreme Court ruled. But we'll check in on AGP, Amerigroup, because this one got a nice premium. WellPoint is again, $4.5 billion for Amerigroup. Shares of Amerigroup up 38% to 88.85. So strong day for Amerigroup. Headed into the first break, folks. Happy to be with you 5 days a week now on TFNN. Ken Shreve, you're listening to Breakout Investing on TFNN.
Just like that, another month has passed and the Great Panther Silver Summer Silver Giveaway has come to an end. Each market day in June, one lucky winner was chosen to receive a 1-ounce silver bar courtesy of Great Panther Silver and TFNN. We'd like to thank all the listeners that chose to participate, and if you weren't lucky enough to be a winner this time around, be on the lookout in the coming months for another opportunity to win a 1-ounce silver bar courtesy of Great Panther Silver and TFNN. Thanks so much and good trading.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pezzavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. 5 days a week now on TFNN from 3 to 4 Eastern. David White, who hosts the Power Trading Hour for the rest of this month, is going to be on from 2 to 3 Eastern, just before me, Monday, Wednesday, Friday, and then at the end of this month, starting in August, he's going to be going 5 days a week as well. Pretty sure I have that right, but you can check out the programming schedule at TFNN.com. All right, so talking about WellPoint's acquisition of Amerigroup. Sort of the timing was interesting here because we had that Supreme Court decision on Obamacare 10, 11 days ago. WellPoint comes out with a major acquisition soon after that decision came out. They're buying Amerigroup for about $4.5 billion in cash. I think that gives Amerigroup a $92 premium, but again, Amerigroup trading around $89 a share right now. Some other stocks rallying on this news. Let's take a look at WCG, WellCare Group. Big gap up. Stock up 17.5% today to 62.11. So big day for WCG. Let's also take a look at another Medicaid insurer. That would be Molina Healthcare. A lot of speculation that these names are going to be in play in the future. Molina Healthcare up 18% today to 27.30. That's ticker symbol MOH. And finally, Centene, CNC, Centene Corporation. It is also up close to 20% today. Big day for the Medicaid insurers. Shares of Centene again up close to 20% to $34.65. Let's check in on Campbell Soup, CPB on the New York Stock Exchange. Campbell Soup down 37 cents today, 1.1% to $32.62. The news here is that they're going to buy food company Bolthouse Farms from private equity firm Madison Dearborn Partners for a little over $1.5 billion in cash. Bolthouse's products include fresh carrots, premium beverages, and refrigerated salad dressing. A couple of IPOs. Pretty stagnant IPO market. Especially after Facebook's less than stellar debut a while back. But next week, there were actually two IPOs that set terms today. Kayak Software is going to be becoming public next week. That's ticker KYAK. Don't have a chart for Kayak Software, but they operate an online platform that allows consumers to compare flight, hotel, travel info. They announced terms on Monday. The Norwalk, Connecticut-based company plans to raise $82 million by offering 3.5 million shares. Price range at $22 to $25 a share. Another interesting IPO set to come public next week. That's going to trade under the ticker PANW. This is Palo Alto Networks, PANW. They also set terms. They're going to hope to raise $220 million by offering 6.2 million shares at a price range of $34 to $37 a share. So that's an IPO that's due next week as well. Palo Alto Networks basically provides firewall products to enterprise customers. So two IPOs on the radar to take a look at. Let's also check in on shares of Boeing. Another story stock today. Boeing got some more business. Shares of Boeing, not responding that well on the news. Up 33 cents, well off its highs. 74.02 is the last quote on Boeing. It hit a intraday high of 74.85. Air Lease said Monday it placed a $7.2 billion order for 60 Boeing 737 MAX 8 airplanes and also 15 737 MAX 9 airplanes. So those are some story stocks. Pretty quiet week of economic data this week. On Wednesday, we have got the Fed minutes from the June 20th Fed meeting, so we'll see what the Fed has to say. Thursday, weekly jobless claims. Friday, producer price index and Michigan sentiment. So not much happening in terms of economic data. Of course, last week, part of the reason for the market weakness, we had another disappointing third month in a row of disappointing job growth. 80,000 jobs created for the month of June. May job growth was revised up to 77,000 from 69,000, but April was revised lower a little bit. Mentioned this when I filled in on Tom's show Friday, but what's amazing is the first quarter showed job growth of 677,000 jobs. That's January, February, and March. The economy created 677,000 jobs. In the second quarter, just 225,000 jobs were created. So that is a tough deal, and this employment situation is really bringing the nervous Nellies out on Wall Street. So there are some problems out there, but again, when everybody's negative, when everybody's bearish, the market tends to do what is least expected. So I don't want to get too bearish here. There are headwinds that we have to pay attention to, though. All right, folks, headed into break number 2. You're listening to Breakout Investing on TFNN. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. 5 days a week now on TFNN from 3 to 4 Eastern. Ken Shreve with you. Thanks very much for tuning in. Let's check in on the markets here. A little more than 25 minutes left to go in Monday's session. Let's check in on the NASDAQ Composite. Orderly decline so far today for the major averages. Nothing disturbing. NASDAQ down about 9 points, 0.3% to 29.28. And the S&P 500 also fairly muted selling pressure in the bogey. It is down close to 4 points, 0.3% as well, to 1351. But again, volume right now on the exchanges tracking pretty close to what we saw on Friday. Volume on the New York Stock Exchange tracking just a tad higher. Possible we could see some mild distribution on the S&P 500 today. Also possible that we could see a second straight distribution day or higher volume decline on the NASDAQ, which wouldn't be good. So we'll have to see how volume settles today. But overall, a growth investor like myself, just tough to have the foot on the accelerator here. And again, as I mentioned earlier in the program, it's just a tough market. When you've got money on the sidelines that's still hesitant to come in, this back and forth kind of whipsaw action. Market looks great one day, it looks bad the next day. It looks great one day, bad the next day. It's really tough to build positions in a market environment like this. But that's exactly what happens when when new money is not coming in from the sidelines. When you're in a low volume environment like we are, it is this type of price action is not surprising at all. So tough to be aggressive with new buys, but I've been nibbling selectively here and there because I feel like, since the market's buy signal on June 29th, it makes sense to have some exposure to this market. Don't need to be overly exposed here, but that's a key part of my portfolio management strategy, to really focus my buys during market uptrends. We are in an uptrend now, which is why I have some exposure to the market. We are not in a downtrend. That's important to keep in mind. So we'll respect the market here. Understand that the price action today and the price action Friday is not great to see, frankly, but still too early to give up on this uptrend. Let's take a look at some other stocks today. 877-927-6648. 877-927-6648. That's the number to use if you want to give me a call, talk about this market. Let's take a look at shares of MasterCard today. Last check, really getting hit pretty good. It has moved off its lows. You can see it rallied down to its 50-day moving average, basically touched intraday low, touched the 50-day moving average. It has, again, rallied off its lows. It's still down close to $11, 2.4% today to $430.88. MasterCard and Visa got sell ratings from UBS. Analyst John Williams basically said he thinks that weak global growth will ultimately result in a spending slowdown, which is going to, hurt a company like MasterCard and Visa. So we'll see how that plays out. But you can see MasterCard was in the process of shaping the right side of a base, but it has, since rallying from about $390 a share to where it is now, around $430, there really has been zero signs of accumulation in the stock. No signs whatsoever of institutional buying, just a lot of low volume gains. Again, and if institutions were buying the stock, if they were accumulating it, you would definitely see volume expanding to the upside. Haven't really seen any of that since the stock hit a low of 389 back in early June. A lot of low volume gains, and really the same for Visa as well. It also got a sell rating from UBS. Let's check in on shares of Visa here. Same situation as MasterCard. It's trading up near its high, still holding nicely above its 50-day moving average. So, nice to see the stock rallying back here. It's down $1.76, 1.4% to $123.52, and that is up near its high for the day. Its high is $124.05, so only about 50 cents or so from its high for the day. So, nice little rally off the lows for shares of Visa. But again, it also got a sell rating. Or a downgrade to sell from neutral at UBS. Same with MasterCard. Another name I've been watching here, a company I like a lot, under quite a bit of pressure today. Let's check in on LinkedIn. Sellers have been in this stock all day. This is an example of what distribution looks like in a stock. LinkedIn down 5.3% to 103.89. This was another good base taking shape here, but again, meaningful signs of accumulation. I don't think so. Signs that big investors, had been buying the stock since it hit a low of 88. Again, that was back in early June. You see a little bit of volume during its recent upswing, but mostly below average volume declines. Not clear to me that institutions are accumulating shares either in LinkedIn. But the news, LinkedIn, there was a published report that said Facebook might be close to adding a job search feature to its website. Obviously, that could have negative implications for LinkedIn, but I saw some, I think it was JP Morgan, came out and defended LinkedIn, saying that the concerns are overblown, but still a lot of sellers in LinkedIn today. Was really watching this one for a breakout over 107, 108. It tried to, no volume. No surprise, it's not going to make much headway. So this one, still watching it, still on my watch list. It is a name that I'd like to own at some point. Has a lot of characteristics that I like to see in a growth stock. It's earnings report is coming up in a few weeks. Profit is expected to be up 60% from a year ago to 16 cents a share. Sales up 79% to $216.1 million. And what people forget about LinkedIn, again, I've mentioned this when I talk about LinkedIn on Breakout Investing, high multiple stocks, stratospheric valuation, but you're looking at a company that's supposed to grow earnings this year by 94% compared to 2011, and earnings are expected to be up 79% compared to 2012 in 2013. So LinkedIn first turned profitable in 2010. It made 23 cents a share. Last year, it made 35 cents a share. This year, 68 cents. Next year, $1.22. So extremely fast growth at LinkedIn. Profitable, good top-line growth, new product, new service, potential game changer. There's a lot to like about LinkedIn here, even though the stock is under some selling pressure today. Another growth name that I have been watching for a while, have never owned this name, but SolarWinds, really under a lot of pressure here. So, for as many growth stocks as working, there are probably more that aren't working in this environment, which is, again, another reason you got to be very, very cautious if you're, you look at growth stocks showing relative price strength, which is the type of stock that I target. Just can't be aggressive here. But SolarWinds, down for 2 straight days, down sharply on Friday, down another 5.5% today to $40.27. Shares gap down today. This is a maker of network, performance management software, and SWI is the ticker symbol here. FBR Capital downgraded SolarWinds to market perform from outperform today. Let's check in on CRM. Salesforce.com. Now, this is a former leader that has really been beaten down. In fact, this is not a good-looking chart. This is a chart that tells me the stock probably wants to go down from here, not up. It has completely surrendered its leadership position. Shares of Salesforce down another 3.2% today to $131.40. A lot of people are going to talk about how Salesforce remains well-positioned for growth, and they do have a good track record of growth. There's no doubt about that, but technically this stock is weak, which is important to pay attention to. The Wall Street Journal reported earlier today a company is close to acquiring a company named Go Instant for more than $70 million. Small acquisition. Go Instant's software allows people in different locations to browse websites together. Company says the software is useful for sales calls, customer support sessions, sort of like a go-to meeting. It sounds like it's a go-to meeting type concept, except that people can browse websites together. So interesting technology. CRM is interested in buying this company. Stock down 3.2% to $131.40. NetSuite is in a similar business to CRM. Another stock that looked like it had potential here. NetSuite is a provider of on-demand customer relationship management software. Again, stock good breakout, showing relative price strength, had the look of a leader, been taken apart for 3 straight days. NetSuite down particularly hard today, very heavy volume. Stock is down $2.47, 4.6% to $51.25. So this is a name that I am not interested in owning at this point. It was a breakout that had potential, not looking good at this point. So that's NetSuite. Didn't see any news. Some strong performing stocks today. Stocks on my radar. Let's take a look at Questcor. Questcor Pharmaceuticals. Its main drug is Acthar. Boy, the stock's having a big day today. Up $7.06, almost 14% to $57.29. Questcor released preliminary June sales of its lone drug Acthar gel. The company estimated it sold 400 to 410 paid subscriptions of Acthar. That's up at least 50% from June 2011. The drug is already approved for 19 uses by the FDA, including treatment for MS, multiple sclerosis, acute inflammation, and various types of arthritis. Let's take a look at a weekly chart for Questcor. Get better perspective here, see where we're at here. Is this stock Is the stock viable right now, or is it too late? And you know what? We'll see that it is probably a bit late here, because last time Questcor broke out was from on the weekly chart, you can see the swing point of 46.84, and the breakout was during the week of June 15th, mid-June, right in this area here. So anytime a stock moves more than 5% past a swing point, and it's getting extended, and you can see Questcor has pretty much moved straight up. Now, if it pulls back to its 10-week moving average in that $47 area, that may be a very mild or a reasonable entry point. But at $57 a share, I would not chase it up here. But Questcor, excellent fundamentals. Company continues to execute. Sales growth has been accelerating in recent quarters. Growth prospects are bright. There's a lot to like about this company. It's just you just don't want to chase it. Don't want to chase it up here, because chasing extended stocks is pretty risky. Another high mover, strong mover, I should say, NSM, Nation Star Mortgage Holdings. This is a company that went public in March earlier this year at $14 a share. This is a daily chart for Nation Star Mortgage Holdings, and this is another example of what an extended stock looks like. So it's a growth name that's working, but the last breakout for Nation Star was quite some time ago. So the fact is, Nation Star broke out over $20.36. That was the swing point right here. Broke out from a nice little base, but right now the stock is trading at $24.55. So after several days in a row up in price, yes, it's under accumulation. It's a strong price performer. It does have good fundamentals, good growth prospects. Nation Star is a provider of services, basically services residential mortgage loans in the U.S. But solid company here, but you got to be careful chasing stocks like this. It is too late to buy. Let's check in on shares of Apple. Why don't we check in on Apple here? Apple at last check was outperforming today, up 1.2% to $613.12. See, Friday it held up pretty well. Still like the look of Apple here. I've definitely come around to this stock. I was a little skeptical about its ability to lead, but hey, it's showing relative price strength. It's acting well in a tape that's still a bit uncertain. Apple unfazed today by news that a British judge ruled Samsung's Galaxy tablets did not infringe on Apple's designs for the iPad. Both Apple and Samsung have patent infringement battles going on in about 10 countries. So shares of Apple continuing to perform well here. They're going to be coming out with earnings later this month. They've got their iPhone 5, which should be out by the end of this year. Also, news they're going to be coming out with a smaller screen tablet computer as well. So as always, a lot of things going on with Apple. Never ceases to amaze me how a company as big as Apple is, how they get products to market as fast as they do. It really is incredible for a company with a market cap of $575 billion, something like that. So huge company, but boy, they are continue to execute pretty well. So Apple continuing to look pretty good here. All right, folks, headed into our last break for the day. Still have time to call, 877-927-6648. We'll come back and talk about a few more stocks. Got a big, long list of stocks today. Some airlines acting well, some new issues, the fresh market, been following that one. We'll talk about some of those names when we come back. We'll be right back.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
Just like that, another month has passed and the Great Panther Silver Summer Silver Giveaway has come to an end. Each market day in June, one lucky winner was chosen to receive a 1-ounce silver bar courtesy of Great Panther Silver and TFNN. We'd like to thank all the listeners that chose to participate, and if you weren't lucky enough to be a winner this time around, be on the lookout in the coming months for another opportunity to win a 1-ounce silver bar courtesy of Great Panther Silver and TFNN. Thanks so much and good trading.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing, 5 days a week now on TFNN from 3 to 4 Eastern. Let's check in on shares of Zillow, ticker Z, on the New York Stock Exchange. Zillow, interesting company, came public last year in, when was it, July 2011. Setting up in a pretty good base here. Shares of Zillow today down 28 cents, 0.7% to $39.49. But this is just a good example of what a base looks like as it takes shape. Pretty standard story among growth stocks. This is another stock. There have been some signs of accumulation, but not a whole lot recently. Just low volume gains. But I like the fundamentals at Zillow very much, and it is a good base taking shape. So this is a breakout candidate, and when new money does decide to come in from the sidelines with conviction, some of these growth names, some of these stocks that have the potential to be emerging leaders are the names you're going to want to pay attention to. So I think Zillow has great potential to be an emerging leader, but that's not going to happen until institutional money starts coming into the stock. You've got a swing point way over here. I think this was in early May at 44.23. What Zillow could do here, though, is just form a little handle area. It could just drift lower for a few days. Here you would have a swing point right around that $40 area. So if you get a wave of buying, volume expands to the upside. This is a stock that trades about 675,000 shares a day. If you see a big volume surge at the open during the first hour or two of trading, this one could try to take out that 40 level, so definitely one to watch. Zillow. Some little-known airlines acting well here too. Oil prices are down around $85 a barrel thereabouts, but shares of Spirit Airlines, that's ticker SAVE, Spirit Airlines, also acting well here. Another base building stock, not quite ready yet, but definitely has been under accumulation lately. Hit a low of 17.41. This was again back in early June when the markets hit lows back in early June. It's been rallying nicely. Some above average volume price gains as it's worked its way higher, back above its 50-day moving average. Still a little deep inside its base, but I like the fact that volume is expanding to the upside here. It does look like this is a stock that could work here. Spirit Airlines came public also last year in May. Right around $11 a share. It's been an outstanding performer in the market. So airlines, not an area that I normally look at very closely, but Spirit Airlines has outstanding fundamentals, good top-line growth in recent quarters, very profitable, good growth prospects. Like this name a lot. So Zillow and Save, very interesting. Let's also take a look at Union Pacific, UNP, Union Pacific, large cap railroad operator. It's outperforming today, up a little more than 1% to $118 a share. It is showing nice relative price strength. Recently broke out for a swing point of around $116 a share. Still within buying range here. So let's take a look at the weekly chart for Union Pacific. And large cap stock here, market cap of around $56 billion. You can see the recent breakout over $116 a share. Showing relative price strength here. Technically, it looks very strong. And again, still within buying range. You don't want to chase a stock when it moves more than 5% past a swing point. UNP's swing point at 116, trading around 118, so still within buying range. Again, coming up after the close, earnings from Alcoa, expected to report earnings of 6 cents a share, down from 32 cents a year ago. Revenue expected to fall 11.4% to $5.83 billion. Let's check in on Alcoa real quick before we head into the Tom O'Brien show from 4 to 6. Alcoa up 0.4% to $8.76. Take care, folks. Have a great day. We'll see you tomorrow.
Great Basin